On, let's focus on a stock that was buzzing. Carysil India was up more than 10% yesterday. Quarter 3, remember, was weak. It was impacted by exports. But to understand how is quarter 4 shaping up and the way ahead, we're joined by Mr. Chirag Parekh, the CMD of the company. Hi, Chirag. Good morning. Thanks so much for joining in. Well, the stock has been buzzing, so clearly the street is a little bit optimistic on recovery in quarter 4. Earlier, you had guided for around 650 to 700 crores of revenues for FY23. As of 9 months, you have done close to around 450 crores. So is 200 crores, going to happen in quarter 4, or do you want to revise down your guidance? And what about margins? You hold on to that 18 to 20% band?
Thanks, Nigel, for having on the show. I think, during the last, my call, the investor call after the quarter 3 results, the results has not come out as bad that what we had thought. I think the quarter 3 shaped up quite well. I think we were almost in par with quarter 2. And also I gave some outlook of the business is that the US market is improving. We almost got back to the pre-COVID levels of order booking in UK, US, India. So I think the outlook looks very optimistic. While there are still challenging times which we'll face, especially in the sector, but I think the fundamentals of the business remain still very strong.
That's right. Chirag, you have mentioned that this is an underpenetrated market. It's good to hear that at least the global trend is improving, as you're mentioning. You'll end this year, though, at 650 to 700 crores, or do you want to revise that downwards? And margin outlook as well, 2 key numbers.
Yeah, so I think we still were very bullish on the quarter 4. We may not be able to hit the numbers what we had earlier planned, but I think the good thing is the company is getting back on track. Our pre-COVID levels order booking is coming back to the normal level. So yes, so we are very optimistic for the year 23-24.
Okay, I'm sure you're very optimistic, Chirag. I must tell you, as a consumer of kitchen sinks, I've spent a lot of time when I was doing up my house, into the multiple avenues, kitchen sinks, cooktops and all of that. I'm sure demand has come back because people must have not spent money on all of this for the last 2 years. But tell us, you had a target of a long-term revenue target of around 1,000 crores. Do you stick with that? And what could the triggers be? I understand that you're supplying to IKEA as well, and you've doubled down your supply there. Sales of Grow Hair are increasing. What could the triggers be to achieve this 1,000 crore revenue? What is the growth strategy? Any new clients that you've got on board?
No, sure. I think you mentioned the correct point is because people who are after post-pandemic were traveling now lately. The 6 months has been revenge travel to, yes, so they didn't have time to buy kitchen, but that's coming back now. People are coming back to their homes, and now you see that people are spending more in the kitchen. So I think that's number 1. Number 2 is that I also mentioned that there has been a lot of crisis which we hear in the European side, and 90% of our competitions come from the Germany and Italy. So I think we are seeing a lot of opportunities. We are seeing the wind blowing to our side. There's a bunch of opportunities which we are talking about it now. And so hence we see that the Carysil is going to be, I think, bundled up with opportunities. Our long-term target of 1,000 crores, I think, still remains intact, and we are very confident we're going to achieve that.
Okay, so confident to achieve the long-term target. Any timeline that you're looking at?
I think, this year, I think we're expecting about 20% growth. I think we should be closing around 600 crores, 585 to anywhere between to 600. I think next year, I think we are looking at a good positive outlook on this. I think if that goes as per the target, we're looking at a 25-30% growth next year and the year after. So I think in all probabilities in the next 2 years' time, we should be able to achieve the 1,000 crore target.
Okay, so by 2025, you should be at around that 1,000 crore target. For this year, you're going to be ending closer to around 600 crores. And on that base, you're looking at a 25% growth. We've got those numbers correct, right, Chirag?
Yes.
Okay. What about the margin outlook? 18 to 20%, you maintain that?
Margin outlook, we are once again confident we're going to maintain that because input cost, energy cost, freight cost has just gone, I mean, they have come back to the pre-COVID
Okay.
levels. So we quite,
So 18 to 20% is what you're holding on to. You know, Chirag, you had this expansion plan at the start of this fiscal, which you pulled back for 200,000 units odd. Are you looking at restarting that particular, expansion plan? Because it was on pause mode, I understand. What's the latest out there?
yeah, I think we had to put it on hold because the geopolitical situation in Europe and where the global inflation was going to, we had to literally check ourselves. And so I think we are watching it carefully quarter on quarter. Opportunities are going to rise, like I said, and we are just hoping to restart our expansion once we see that the whole inflation, global inflation is under control, and I'm sure that the housing and everything is going to get back on track. But till then, we're going to focus our efforts on expansion of the stainless steel sinks, which we have opportunities. We have with the major customers, tie-ups with IKEA, Brewer, UK,
Sure.
and now we are do with the US. So we see a good volume expansion in the stainless steel category, and we are looking into diversification of manufacturing built-in appliances and kitchen faucets.
So you have this, you've made this acquisition of Tickford Orange as well, right? Tell us a little bit about it because I understand it has over 35% market share in UK. What kind of growth are you looking at over there? 30 to 35 crores per quarter is what you've done in terms of current revenue run rate. How much can you grow it by?
I think it was a very strategic acquisition, and it was and I think the UK piece is playing out very well. We have been able to beat our budgets in the current year, both from the the surfaces side and from the sink side. Is purely there were a lot of cross-selling opportunities. So I think we'll be doing better quarter on quarter with the Tickford, and now it is called Carysil surfaces now. So I think we expect to do better on quarter
Okay.
because we see improvement in the order booking.
Got it. All right, Chirag, thanks so much for stopping by and giving us all those details. So now it's going to be around 600 crores for this year, margins of around 18 to 20%, but optimistic that you'll grow at a clip of around 25% for the next few years. Well, getting back to the markets, though, we're at the low point of the day. So Mitesh Thakkar